Hi, everybody. Welcome. We're Vancity. Thanks for joining us. We've got a few people from across the province joining us today. So we are going to get started. First, I'm going to tell you a bit about Vancity. So Vancity, for the last 75 years, we've helped shape and invest in the future of our communities. Banking with us means that every dollar, every tap, every swipe helps create a clean and fair world. Together with our 550,000 plus members, we are a financial force for change, and we are the biggest credit union in Canada. So my name is Melissa McCall. I'm the mortgage development here in the Okanagan, and I've got my colleague Lindsay Algra joining me today as well. She is one of the mortgage development managers in the Lower Mainland. Here she is. Lindsay's joining us.
Hi, Melissa. Thanks so much for having me.
No problem. So I'd like to start by doing my land acknowledgement. So I would like to acknowledge that I work and live on the territories represented today by the Salix First Nations. They have been custodians of this land for thousands of years, and I would like to pay my respect to the elders, both past and present. Lindsay, I'll hand it over to you.
Yeah, thanks so much. And Melissa, thanks so much for putting this all together. I so appreciate it and getting to interact with all of these great professionals that you've put together. As Melissa said, I'm Lindsay Algra, Mortgage Development Manager with Vancity. I primarily help out the Lower Mainland, but can assist anywhere. I would also like to acknowledge that I am here gathering on the Stolo territory. I live in Mission and have for the last 20 years. The Stolo peoples have been custodians of this land for thousands of years, and I would like to also pay my respects to elders, both past and present.
Okay, so we are here today, obviously, for the first time Homebuyers webinar. Again, this is a province-wide event, so we've got lots of people joining us from all over the province. We've got lots of good information to share with everybody. So our speakers, we have Laura Kershaw. She is from CMHC, so she's going to be talking about what CMHC is and how they're involved. We've got Deanna Stone. She is our lawyer here from Montgomery, Miles and Stone, and she's going to be going through the conveyance process when you're getting a home. We've got Kendall Kinnear. He's our licensed home inspector from Argos Home Inspection. Of course, we have two realtors involved as well. We've got Kaila Klassen. She's from Royal LePage here in Kelowna. And then we've got Steve and Erin Middleton, and they are from Remax Lifestyles down in the Lower Mainland. So I am just going to get right to it. So we've got our agenda. We've got how to prepare for the pre-approval, the pre-approval itself. You have a pre-approval. Now what? You have an accepted offer. What does that mean? CMHC loan insurance with Laura. We've got our two realtor teams joining us after that. We then have Deanna joining us, who of course is our lawyer. And then we've got Kendall, our home inspector, who is going to close us out today. So how to prepare. Are you ready for a pre-approval? So obviously this is a big moment in everyone's life, heading towards that home ownership goal. A few things that we need to keep in mind, especially if you are sort of just beginning the process to start thinking about home ownership, start thinking about that pre-approval. Good credit. You need to establish good credit. So what I recommend to all of my members, pay your credit cards, your student loans, your personal loans, your vehicle leases on time. That is absolutely number one. It's fine to have debt. Everybody has debt, but you need to make those payments online. If you can pay off your credit cards monthly, fantastic. That is actually going to boost your credit rating. And it's also going to help you save money on interest costs. So the reason good credit is important is because it shows that lender, whether it's Vancity or some other lender, that you know how to manage your finances and that you are consistent and reliable at making those payments. And believe it or not, a few missed or late payments, even something as simple as your cell phone, and I've seen it time and time again, miss a couple cell phone bills, you will actually have bruised credit. So the difference between good credit and bruised credit can actually be quite significant and really make a difference between whether you're going to get pre-approved or not. So down payment, that's another big one. So building your down payment, again, this is something that ideally you want to start a couple years out. So your down payment can be comprised of such things as savings, obviously, your RSP, You can take advantage of that option where you're actually doing a home buyer's withdrawal from your RSP. You pay it back to yourself over a certain amount of time. Monetary gifts from relatives, of course, that plays a big factor right now in our markets. We're seeing a lot of parents giving money to their children to help them get into the market. One thing that's really helpful is a budget. So a budget is going to help you understand where your money is going and allow you to see where you can save for that down payment. Maybe it means cutting out Starbucks every day. Maybe it means not going out for dinner as much. Maybe you're getting a cheaper bottle of wine. I don't know where you're going to cut, but budgeting is super important. So consider consolidating your debt, specifically if you have high interest credit card debt. So what you probably want to do to try and save on interest costs is to reach out to your financial institution, talk about maybe a consolidation loan. So then you're getting those credit cards into one manageable payment, and you're paying interest at a much lower rate. So really, really easy way to just immediately allow you to save more funds. So employment history, that is obviously number one. You do need to have a job to get a mortgage. So typically a lender will look at a 2-year employment history. Ideally, we like to see same industry, but not always. If we can make reasonable jump from one industry to another industry, if you're moving from being an employee to self-employed, all of those things are taken into consideration. If you perhaps were going to post-secondary education, maybe you were on maternity leave, maybe you're coming off a long-term disability, maybe you were living abroad. So all of these things we will look at. It's not just going to be a note, you don't have 2 years. We'll consider everything. All right, so now I'm going to hand it back over to Lindsay for the pre-approval, the time to apply, and what to expect. Thanks, Linz.
Yeah, awesome. Thanks so much, Melissa. So you've worked really hard and you've done some investigation on, are you ready to be pre-approved? Are you ready to go into your financial institution and figure out whether or not you're ready to be a homeowner? One of the main questions that you're going to work through with your lender is the affordability equation. So what can you afford? You might want a detached home right now, but you might only be able to start off and afford a condo, and that's okay. And one of the things that your lender is going to go over with you is the debt servicing. So typically two ratios that your lender is going to look at is your gross debt servicing. This is the max GDS, gross debt servicing ratio, that can usually be about 39% of your income. Typically, we don't like to go more than that because we know that we want to see you be able to actually live and enjoy your home and not be too strapped financially. In Canada, financial institutions stress test your mortgage payment to ensure that you can afford your home now, but also if interest rates rise, and we've seen that over the last couple of years. This is calculated based on the greater of either the contract rate plus 2% or the OFC rate of 5.25%. And how we calculate this is we take your mortgage payment, we add your property taxes, your strata, your heating costs, and we divide that by your gross monthly income. And gross monthly income just simply means before tax dollars, your before tax income. And then we look at your total debt servicing ratio. And we don't like to see this be any more than 44% of your income going towards your housing costs plus any debt that you've got. And this can be student loans, car loans, any utilized credit lines that you've got, any credit card debt. So we add that all up and we divide that by your gross monthly income. And we want to see that number be under 44% or 44% or under. Next slide, please. So next, during this pre-approval process, your chosen lender is going to request your income verification, your down payment documentation. We're going to ask permission to pull your credit. It's really important during this process that you have interviewed a few lenders and decided on one that you're going to work with, and only let that one be the one that pulls your credit. During the time that you need your credit to be in the best financial shape, having multiple pulls can be harmful. We're also going to ask for a list of your assets and your liabilities. So what vehicles do you own? Do you own any other real estate? Do you have investments elsewhere? And income verification does vary depending on your type of employment, and it also varies depending on your financial institution that you're working with. Here at Vancity, typically, we're going to ask for, if you're an employee, you might be expected to provide 2 recent pay stubs and a job letter, as well as a notice of assessment from the CRA. So make sure your taxes are up to date and done. If you are self-employed, commission, or variable, we're going to ask for 2 most recent years of T1 generals, your notice of assessments, and your current pay stubs if you are a commission employee. If you are an incorporated company, you can be expected to provide 2 years of T1 generals, 2 years of notice of assessments, and 2 years of T2s or financial statements from your incorporated company. Next slide, please. So your lender is now going to verify the available funds to be used for your down payment. We're going to ask to receive a 90-day bank statement showing that down payment, and or a bank stamped gift letter if that's where your down payment is coming from. And we have seen that it's so much more common in the last few years, seeing these gift letters. And that's okay, as long as we can verify them. The minimum down payment required up to a purchase price of $500,000 is 5%, and it's 10% of $500,000 up to $1 million. You will also need to consider your closing costs. So these can be things like appraisal fees, home inspection fees, legal fees, property transfer tax, if that is applicable to you, and GST on newly constructed homes. Next slide.
Sorry, one sec. My next slide is slow.
No worries. Let me get a sip of water. I think it's up to you now. You have a pre-approval. Now what, Melissa?
I think it's my turn. You have a pre-approval. Now what? Yay, pre-approval. Okay, so now you are going to look for a realtor if you don't have one already. So it's a good idea to interview more than one. You want someone that really understands your goals, your needs, who you are, and has knowledge of the areas that you're considering purchasing in. Asking friends and family for a referral, obviously, is always a fantastic idea. From there, you're going to want to make sure that you've also got your home inspector on board. So again, you could interview a few, you can look for referrals. A home inspector is an important piece of the puzzle because they're an independent third party that can identify any potential issues or shortcomings in regards to the home. Things that may need to be repaired or replaced either now or down the road. Again, a referral is always a great place to start. Now your legal expert comes in. So your legal expert, much like your lender, the lawyer does a lot of behind the scenes work that you don't see until it's time to sign on the dotted line. And even then, you're not going to see all that's involved. So the lawyer, as you can imagine, takes care of all the legalities in regards to your purchase. They also help file for any property tax exemptions that you're eligible for, and they ensure that the correct amount of funds are dispersed to the seller on you and your lender's behalf. So do not make any changes at this point to your pre-approval status. So do not go out and get a huge vehicle loan or leases or anything. Basically, just don't do anything. Don't change employers unless it's necessary. Don't lend out funds or spend your down payment and closing costs. Any changes in these areas could seriously jeopardize your pre-approval. So as we said, you've got your realtor figured out. So now you and your realtor are going to go out and they're going to take you out and seriously start the search for your new property. Once you find a place that you would like to make an offer on, of course, it's not always that quick. It may take a few times before you find the one that you want. But once you do find that place that you want to make an offer on, the realtor is going to negotiate on your behalf, write up that purchase agreement on your behalf, as well as any subjects. And Lindsay, I think it's back to you. You have an accepted offer. Now what?
Yeah, thanks. You know, I wanted to just quickly touch base on one thing you mentioned, which was gathering your team. And I think it's really important, especially for first-time home buyers, to understand that you're going to be working with these people for it could be months until you find your
Yeah.
property, right? And
Yeah.
you're going to be calling your lender, will this home work? Will this house work? It's really important that you do those interviews. Just because your family and friends say that, hey, you got to use this person, they were great, you might not jive with that person. So it's okay to interview a few different people and make sure you are working with folks that you get along with, and the relationship makes sense, because most often you'll create a relationship with your realtor and they will probably be in your life for the next 20 years, buying and selling different properties. So
someone that you're going to text at 10 o'clock at night.
Yes, and someone who will answer. And I think that one thing that our industry professionals do recognize is those folks, and when we're working for somebody and we're trying to put a deal together, and that realtor does answer the phone at 10 o'clock at night, or that lender answers the phone at 10 o'clock at night, it really makes this process so much smoother for our clients. And I'm sure every one of us on this call can agree that's the most important thing, is to make this transition a smooth one for our members, right? And our clients. Okay, so you have an accepted offer. Like what the heck? Now what?
Now what? And again, my slide is very slow. Okay, there we go.
So two pieces to a mortgage is there is a pre-approval for your financing. We want to make sure you can afford an assumed property amount. And then there's moving into the full approval, which is putting all these pieces together and making sure that we can approve the property also. And a full approval is based on your income and that property. So now that you have an accepted offer, your mortgage specialist is going to need the purchase agreement, the MLS listing, the property disclosure statement, and possibly a depreciation report or strata minutes, depending on which property you're purchasing. And this is where connecting your team comes in handy. So if you send your realtor and your lender an email introduction and say, hey, Kaila, meet Lindsay. Lindsay, meet Kaila. We will work behind the scenes for you, because right now you're going to be in your subject removal time. And we'll talk about the dates in a moment. You've got a certain amount of time to get your ducks in a row, and I'll get to that also. So your lender is going to review the property and determine what type of appraisal is needed. We're going to review the expenses associated with the property, such as the property taxes, heat costs, and strata. If it's a high ratio mortgage, so you have less than 20% to put down, CMHC is going to need to be contacted, and they're going to want to analyze the property and determine whether or not a full appraisal is required. Next slide. So here it is, meeting your subject removal date. So your purchase agreement is going to have 3 important dates that you and your realtor have agreed on with the seller's realtor. Those are going to be your subject removal date. This date is really important for your lender, your completion date, and your possession date. Completion date is the date that money changes hands. Possession date is the date you get the keys. So subject removal date, this is the date that you will want to have all your ducks in a row. So you're going to want to have your full mortgage approval. It's going to be converted from a pre-approval to a full approval. You're going to confirm the ability to satisfy the lender's property insurance requirements. You're going to have that inspection completed, and any remaining subjects are going to be completed during that time. Next slide. So during that subject removal time frame, this time frame can be anything that you guys have decided on. I'm hoping that as a lender, you try to give us 7 days. And the reason why is because there's a lot of work that needs to go on behind the scenes in that time. And during an offer stage, it's never fun to rush. Granted, there's some markets that these subject removal dates might be a little bit less or a little bit more, and depending on the property. Your lender is putting together the full approval during this time. Your home inspector is reviewing the property and providing you a report on findings. And you can share any of the concerns that you get in that report with your realtor. I have been a homeowner now for 25 years. I've bought and sold 4 homes, and I have never, not once, not had a concern on a home inspection. Every home we buy, my husband says, I'll do the inspection. And he's so sweet, but I always get a home inspector to come in. And we have an awesome home inspector that you guys will get to meet soon, and he will go over all of that, I'm sure. So if you decide to, are you surprised because you think, how could I be a homeowner for 25 years?
I am.
Thanks.
You bought your first house when you were 5, right, Liz?
Yeah, exactly. If you decide to remove subjects and move forward, you're going to provide that subject removal document to your lender. You're going to decide on the type of mortgage term you want to take. So fixed, variable, open, closed. Side note on this, you might want an open mortgage, but you just might not qualify for an open mortgage. Those rates are a little bit higher. So at this time in your life, you might not. You might need to take the fixed. Fixed has always been my preference anyways. So anyways.
And sorry, can I just interrupt on that?
Yeah.
So the thing too with first-time home buyers is I find, you know what, the 5-year is just a nice vanilla mortgage. You know, the rate is always going to be good, especially if you are needing to have a CMHC mortgage because the insured rates are historically lower. And it's nice. As a first-time home buyer, you just don't have to worry about it for 5 years. You know what you need to do. You know what your monthly payment is. You don't have to sleep or try not to sleep with a variable rate or something else. Yeah, it's a great idea.
Yeah, for sure. I've only ever had a 5-year fix, and I'm in the industry. I just prefer to, I'd like to know what my payments are for the next 5 years. Each person does need to do a risk assessment on yourself. I always say to every one of my members, if you take a variable and rates go up and your rate goes up, will you lose one night of sleep? If the answer is yes, that product's not for you because it's just not worth it, right? It's not worth it to be in that stressful situation. Talk about wealth protection. If you're dealing with a lender who doesn't offer wealth protection, so life insurance, critical illness, disability, you really need to make that a priority. It's super, super important. We all go into the beginning stages of our life thinking nothing's going to happen. And unfortunately, that's not always the case. So always make sure that your family is protected. You're going to want to complete your signing with your financial institution.
Can we just go back to the insurance for 1 second? Yeah. So
sure.
One thing I will add with that insurance piece is to check and see what you've got with your employer. Everybody often says, oh, I've got insurance for my employer. Honestly, it's probably not enough. Plus, that insurance may be earmarked for something else. If something happens to you, you want to make sure that that asset is protected and that your family's not left with some sort of debt. And the bottom line is the younger you are, the cheaper the insurance is going to be. Sorry, go ahead, Liz.
Yeah, no, absolutely. And the other piece to that is nowadays, especially now, you're seeing folks change employers many times. It's no longer the norm to be with the same employer for 30 years. So when you leave an employer 20 years from when you started, you're now 20 years older and you're trying to get insurance somewhere else. So like you said, it's cheaper to do it when you are younger. Where am I? Complete your signing with your financial institution. Your mortgage documents and the property information are then going to be forwarded to the next person in your team, which is going to be your lawyer or your notary. And you're going to want to set up with your appointment with your lawyer's office well ahead of time. Don't call them the week the mortgage is closing. Nobody likes a rush, and you want to give everybody lots of time. And this is just to mitigate for any errors. Next slide. Putting the pieces together. So yeah, the meeting with your lawyer is essentially the very last, but the most important task that is on your list. Your lawyer is now going to prepare all of the documentation. They will inform you how much money you need to complete on your purchase. This money comes from your new mortgage and your down payment. And then you're going to sign your life away, page after page after page. Next slide. I think that's
one.
I think that's me. Yeah. Nope.
Yeah,
that's
there
me.
We go.
Oh, yes, I did miss one. Okay. Completion and possession date. Very exciting date. So completion date is the date money changes hands. Probably not as fun for you as the seller, but the possession date is always a fun day. This is the day that you get your keys, where lovely realtors come in and they probably give you a gift and keys, and you get to move into your new home that you've worked so hard for. So yeah, it's always a fun day.
Okay. CMHC. Okay, so now we have Laura who's going to come on. And I think, Lindsay, you and I are going to remove ourselves, right? Hi, Laura.
Hi.
So everybody, this is Laura from CMHC.
Perfect. Yeah, and I'm happy to be here. Thank you for inviting me, and hello to all the first-time home buyers on the call. It's an exciting time to even just be starting your homework and digging into your options for being a home buyer. At CMHC, if we could just switch right to the next slide. I'm an account manager with CMHC and have been for 12 years, but have been in the mortgage industry for 25. So have been in the industry for a long time, and have always really enjoyed doing sessions like this. At CMHC, what some of you may not know is we're Canada's national housing agency and have been around now for 78 years. And a lot of our communities throughout Canada actually are homes that were built, and why we started 78 years ago post-war to build some of those homes throughout our communities because of just the housing shortage. And we have many different departments within CMHC. For us today, I'm going to be focused on mortgage loan insurance, and Lindsay and Melissa both covered a lot of good information. Some of it I'm going to be doing a bit of an overlap, but good and relevant information nonetheless to touch on again. So at CMHC, when you are putting, when you're buying in Canada, the Bank Act requires when you're putting less than 20% down, that your mortgage debt is going to be insured. So this isn't life insurance or any insurance for you. It's a debt insurance for the lender. So Vancity in this case would be protected in the case of worst case scenario. Life happens to everybody, and sometimes we're just not able to keep up with our payments. That could be a job loss, it could be injury, what have you. And in that case where you're not able to keep up with your payments, this insurance is protecting Vancity or the lender from that. So it's a fee that's incorporated into the mortgage. We'll go through some examples just to demonstrate that. But the good news is, with having our mortgage loan insurance protecting lenders with down payments with less than 20% down, you're able to be a homeowner and purchase a property in Canada with as little as 5% down. So it's considered sort of like a low down payment insurance, but you're going to be able to put as little as 5% down. No, you're right. Next slide. The terminology that is used in the industry for that is high ratio mortgage. So when you're putting less than 20% down and you're going to have that low down payment insurance on your mortgage, it's considered a high ratio mortgage. And your lenders will use the term conventional, and that just means it's not being insured. So that's where you're putting more than that 20% down. It's a conventional mortgage. And there was some mention about the rate differences, and it's really important and it's valid. When your mortgage is insured, you actually are going to benefit from a lower mortgage interest rate. So although there is a fee, and we're going to do an example of that as well, there is a fee, of course, for putting less than 20% down and having that insured debt for the lender. You benefit also from having a lower interest rate. Next slide. So I know that Lindsay went over the minimum down payment. Here's just an example. I wanted to show you a couple of calculations because I find there's still a lot of confusion around how much do you have to put down on a home in Canada. And the minimum up to $500,000 is 5% down. So if your purchase, your lending value is $500,000 or less, you can see here for a $500,000 purchase, 5%, your down payment would be $25,000. Now, if it's over $500,000 in Canada, we have a tiered down payment system. So up to $500,000, it's 5%. Anything over that, it's going to be 10% down. So you can see on the bottom part of this graph, there's an example for a $600,000 purchase where you have 5% of the first $500,000, and that would be $25,000, and then 10% for the $100,000 over that $500,000 amount for $10,000, with a total down payment of $35,000. Next slide. And the premium that you're paying. So there is a fee. It's a one-time fee. It's added into your mortgage and it covers the mortgage debt for the full amortization. So the amortization is the full length of time you're going to take to pay out those mortgages. And each mortgage has a term, right? So Melissa and Lindsay talked about having a 5-year interest rate. That would be your term. And you're going to choose multiple terms in time over that amortization of paying down that debt. And so when you pay a CMHC mortgage insurance premium, it's covering that mortgage debt for the full amortization. And so if you sell that property, what's important to know is you can actually port our premium, this fee that you're going to pay, to your next property as well. So that's a conversation that your lender would have with you if you were to sell it. And the fee is going to vary depending on the loan to value. So depending on how much you're putting down on your purchase, it's going to impact how much your insurance premium would be. So if we're looking at, in this example here, a $400,000 purchase, the minimum down would be 5%, and the premium based at 90.01% to 95% is 4%. So your premium that would be incorporated into the mortgage would be $15,200. Now that cost, keep in mind, it is a big fee. It's added to the mortgage. So you get the benefit of paying it with the low mortgage interest rate, the amortization, so it's stretched out over 25 years. And again, it's not out of pocket, so you don't have to worry about having the savings on top of your down payment. So Melissa talked about the importance of a pre-approval, and it is so important because it helps you with your conversations with your realtor when you're out and you know exactly what you can qualify for. It allows them to really do a deep dive into the properties to look at. Gives you peace of mind because you know that when you're there that you can afford and qualify for that property. What's really important to keep in mind is a pre-approval is vetting you just on your income. And there was mention of debt servicing. So that's looking at your income divided, or sorry, your payments. So your mortgage principal and interest divided by your income. So we talk a lot about debt servicing. That's what we're looking at as your professionals, both your lender and then at CMHC. So the pre-approval is vetting you based on what can you qualify on, but they're not looking at the property at all. So just keep in mind, you never want to remove your subject to finance, which is a subject your realtor will go over today, I'm sure, until you know you have an approval with us. And so what we're going to do is we're going to review you, the borrower, the market, and the property. And less than 4% of our files even need an appraisal. Most of our files, 98% of them are turned around and approved within 2 hours. So it's not a slow process. We're quick, and you're going to get your approval quickly. Next slide. And credit. Credit is so important for the lender, so important for us. So one of my tips for everyone joining, if you don't already have credit cards, it does sound a little counterintuitive because unfortunately you have to use credit to get good credit. So applying for and having credit cards, a line of credit, an RSP loan, multiple things that you can do, but do make sure and try your best to have 2 trades on your credit bureau. Use them and pay them off every month. By doing that, you're going to really help to build and generate a beacon score, which is what it's called, the magic number that is calculated based on your credit use. And that's really important for your lenders and also for us. We have 2 credit agencies in Canada, Equifax and TransUnion. I would encourage everyone on the call to go onto their websites, request a copy of your credit bureau, and do this every 2 years. Regardless if you're looking for a mortgage financing or not, we should all be on top of what is our credit score, what is on our report, are there mistakes, and to make sure, and also for identity theft reasons, that you're just checking in and know what's on your credit bureau. And then you can see the categories on the right. That's breaking down the range. Sorry, I'm seeing I don't know why my video is so close for some reason. That's not the norm. But you can see the categories here for the range on the beacon scores. For CMHC, our minimum is 600 for a beacon score. That's still very low. So where your lenders and usually us are going to want to see you is closer to that 680 or higher. If it's lower, it's important that you're sharing that story with your lender but that you're also, you know, paying off those any missed debt. Again, checking in with your credit bureaus and having any of those errors on your report corrected, and working hard to update it to ensure that you're getting those higher, ideally, credit ratings from using that credit. Next slide. So at cmhc.ca, we have some really great tools to support you guys. One of them being our mortgage calculator. It's going to allow you to calculate out and compare different mortgage payments based on the down payment, the purchase price, interest rates, things like that. So it's a great tool for you to be able to play around and see those comparisons based on different scenarios you might be wanting to look at. The affordability calculator, of course, is helping you to look at your lifestyle and what can you afford based on your income and other expenses that you have. And then our debt service calculator. So again, debt servicing is something that, you know, we talk about in the industry, but is probably pretty foreign to most of you joining us. And that's really looking at your income, looking at your debt payments divided by your income. And when we're looking at debt servicing, I know Lindsay had already shared, we're not wanting to go over a 39%. So your housing debts divided by your income shouldn't be higher than 39%. And our total debt servicing, which is looking at all of your payments that you're obligated to pay. So do you have a car payment? You know, what other payments do you have? Your outstanding credit card debt, things like that. Everything's totaled up for your total debt, and then that's divided by your income. And we don't want that over 44%. So those are great calculators for you to play around with, get comfortable, and just know where do you stand and what can you qualify for. So stress test. This slide is also important to understand in that when you're doing those calculations, you're probably going to be keying in the rate that you're being quoted from your lenders, from Vancity. So, and that's great because that's going to show you what your true payments are going to be. But when they qualify you for your mortgage and when they submit it to us at CMHC, it's legislated in Canada that you are being stress tested. And this is a way for us to be able to ensure that, one, you can afford a little bit of an increase in a mortgage payment, that it's really good due diligence to make sure that we're giving you a bit of an extra comfort level in those payments should you be renewing into a higher rate. And it's a really good thing we have that, because as I'm sure you have heard, the rates have been going up over the last couple of years. So by stress testing folks earlier and knowing that they could afford a little bit of these higher interest rates that they're renewing into helps to alleviate the pain points that they might have. The good news is that we're anticipating the rates to slowly start to come down again. And we have some, and I know that you have some good rate offerings through Vancity. But if they were to quote you a rate, what's important to know is when they're stress testing your mortgage, they're going to be looking at the greater of either the rate they've quoted you plus 2% or 5.25%. And that's for both insured and uninsured mortgages. So we're going to look at an example on the next slide. Oops. Whoops, so you went past one. That's all right. Good. So on this one here, we have a $400,000 example. You know, you're buying a condo, amortized over that 25 years. You're going into a 5-year fixed rate. So you've chosen a 5-year term, and say the mortgage interest rate is 4.99% right now. Your payment, you can see on the left, would be $2,324. So that's a great rate and a great payment. What's important to keep in mind, again, is when you're qualifying for the mortgage, your lenders are going to have to qualify you on either 4.99% plus 2 or 5.25%, whichever one is greater. So of course, the rate plus 2 is larger. So that payment at 6.99% would go up to $2,799. So that's a difference of almost $475, right? So that's a substantial difference in what they're having to stress test you on, and just so important for you guys to understand, because it's going to really change what you might have as the expectations around what you can qualify for. Next slide. And we have an excellent program at CMHC. I love telling everybody about this. I've been actually, Lindsay, a homeowner for 24 years, so not quite the 25. And the first property that my husband and I bought was a little condo, 2-bedroom, 2-level home. And our lender thankfully knew of this program. And this is an improvement product. And what it does is it allows you at the time of purchase, based on what you pre-approved for, you know what you qualified for. When you're looking for your property, this program allows you to incorporate the costs of home renovations and repairs at the time of purchase into your mortgage. So if you're qualified for, say, 500,000 and you find a condo for 400, you know that if you want to update that kitchen, you can roll that $40,000 cost of renovation into the mortgage at time of purchase. You have to get quotes, of course, and there's, you know, some things that your lenders would want from you, but it's a really smooth and easy process to help keep update the property to what you need and be more focused on the location with your realtors, knowing you can do those minor updates to the property so that it fits your needs. It's an excellent program. When we did it, we put in all new flooring, we did paint throughout. It had really old brass fixtures that we replaced, and it made, and we only added about $10,000, $11,000 to our condo at the time. And it changed the whole space for us and made it ours. So just keep that program in mind, because it's an excellent one to help widen the number of properties that you can get out with your realtor and look at.
Thanks,
And next
Laura.
slide.
That was amazing.
I think we have another slide. There's a
Do
couple
you have
more.
one more? Let me see.
Yeah.
I don't think you do.
Oh, did we lose some slides? Oh, shoot. Okay, well, I'll wrap up with just some of the resources that hopefully we can share in the follow-up. At CMHC, we do have, we have our home buyers guide and home buyer guide workbook. So one of the guides is an A to Z of who you're working with and home buying in Canada. It walks you through the whole process. And the workbook has a whole bunch of worksheets and calculations that you can work on around affordability, what's important to you for the home buying purchase, you know, keeping track of all the professionals that you're working with. It's an excellent tool to support you. We have a online link that you can work through, or you can order a physical copy, but it's a great tool to support you guys through the process too. So thanks,
Laura. So
yeah,
lots of really, really good information. I liked, there's a few points that I really liked. You were talking about the pre-approval, or sorry, the approval process on the CMHC end, how it only takes a couple of days. And it's true. Like once the lender, or myself as a lender, or Lindsay as a lender, can get that application into CMHC, it's super quick. I mean, sometimes it's hours even. So
yeah, so over 50% of our files are in 7 seconds or less, and 98% of our files are within 2 hours. So our turnaround time is really fast when it comes to us. Yeah, and
That's
only
amazing.
less than 4% of our files actually need an appraisal. So as far as like turnaround time with us, it's really fast.
Wow, that's very cool. And then the other piece that I liked is when you were talking about that purchase plus improvements program. So that itself is a very underutilized program for sure. Actually, Lindsay and I were just talking about that. And the cool thing about it is that if you can find a house where you can put a suite in, right, we can help you pay for that in your mortgage if you qualify. And then we can actually use that rental offset to help you get more of a mortgage, which is just fantastic.
Absolutely. It's the best thing right now to support, you know, folks who can qualify and afford a house for their first purchase right now, to add in the suite. And like you said, use that future rental income to lower that debt servicing and increase how much they can qualify for. Yeah, absolutely.
Sorry, I'm going to chime in here, Melissa. I'm not sure if you see, but there's somebody that's asked a question in our Q&A, and maybe we didn't mention that. While we're going through this, if anybody does have any questions they want answered, please feel free to put them in the Q&A section, and then we'll pay attention. But this one actually goes right to you, Laura. The question is, do I have to pay the CMHC premium if I have 20% down because I am a first-time home buyer?
Oh, sorry for any confusion on that. Absolutely not. You only have to pay the CMHC premium if you're putting less than 20% down. And that's regardless if you're a first-time home buyer or a repeat buyer. Any purchase that you make in Canada with less than 20% down requires that debt insurance for the lender to protect that debt. But no, if you're putting 20% down or more, you don't need to have the insurance, although sometimes it may benefit you just because of that lower rate. So your lender would have that conversation with you. And I see actually a couple of other questions too there. What if I don't have enough to pay the CMHC premium and the down payment? So the CMHC premium isn't something you have to pay out of pocket. That's rolled into your mortgage and kept affordable by being stretched over that amortization with your monthly mortgage payment. The down payment, you do have to have that minimum down payment to be able to qualify for financing. So that would be either 5% up to that 500,000 or tiered. There's a lot of great savings programs and offerings to support, and if you have an RSP savings, you might be able to utilize that, but you do need that. And then, sorry, I see one more question as well. I don't know if my mortgage is currently CMHC insured and I'm moving to another house. Do I have to pay this premium again? So that depends. So again, because you've paid for it, you can port that premium regardless of if you're with a different lender and now you're going to come to Vancity, for example, and you want to use them for your new purchase. You can still port that premium to your new home, to your new purchase. If it's just going to depend on are you upgrading? So are you going to need to top up a little bit to be able to purchase that new home? But you could still save thousands of dollars by doing that. So just bring it up to your lender professional and they'll be able to work through the different scenarios with you to make sure that you're saving as much as possible.
Good, that's excellent. Thanks so much.
Yeah.
Okay, so I am going to take you off screen now, and then we're going to bring on our first realtor. Thanks, Laura.
Thank you.
Okay, Kaila, I'm going to bring you up, and I'm going to get your slides going for you. Okay, the realtor. Why use a realtor?
Hello. Hi. Thank you so much for putting this together. This is really great and super informative. I bought my first house when I was 19 and I did not know what I was doing. So this is really great for, I think, not only for first-time home buyers, but for everybody there. So, just a little bit about myself. So obviously my name's Kaila Klassen. I work with Royal LePage in Kelowna. I have been born and raised in the Okanagan, so I know the area quite well. And I started my real estate career at the age of 19. Not 19 anymore. It's been about 15 years. So thankfully I've been doing this for quite some time and am very, very thankful to be in a business that I absolutely love. Next slide. Perfect. Thanks, Melissa. So why use a realtor? I really believe that there are 7 main roles of a realtor. Especially, as a first-time home buyer, you don't really understand what a realtor is, what do they do for you, do I need to get a realtor? And I really believe that having a realtor can make or break the difference of your purchase. Number one, I always recommend making sure you have a realtor that is educated about the market and can educate you about the market, especially if you are moving from a different area, a different location. It's really making sure that that realtor is able to pair you in the right location that does suit you and your family needs. If it's dependent on schools or dependent on close to transit, really making sure the realtor knows their stuff and knows the area. Analyze your wants and needs. I do find that there's always going to be a lot of wants, but I really believe that communicating with your realtor what your true needs are and also what your wants are is going to be so beneficial, so your realtor is able to find the right properties for you and ensure that we are putting those needs at the forefront of our search when we are going through the properties. Steer you to homes that fit your criteria. So once again, that's going to be ensuring you are getting properties from your realtor that aren't over budget or not under budget, and really making sure to stick within that amazing pre-approval mortgage range that you've been given by Vancity, hopefully, and making sure that, you know, you don't get properties sent to you that are unaffordable and you get excited about, you know, about properties maybe you can't afford at this time, and making sure that you are seeing properties that you can afford and that will work for you and your family. Coordinate the work of other needed professionals. So once again, building a team. We've heard that said here on this webinar, and it is so important to build a team around you or work with a realtor that has a very good team. For myself, I am so lucky to have been able to work with Melissa on many different deals. And it is so important because I know when I call Melissa or one of my lending professionals that I work with, I can say, hey, this is the situation. These are my clients, and I know she's going to be taken care of. So I feel so confident referring my clients to the professionals that I work with. And that also goes to home inspectors and lawyers themselves as well. Negotiate on your behalf. So as a realtor, we should be doing a ton of negotiation for you. So I think number one definitely is working on price, making sure that you are getting a price that works for you and making sure you are getting fair market value and getting the best deal possible. There's a lot of tactics we can use as realtors. For example, using comparables that have recently sold, you know, other properties that are currently on the market that maybe are sitting, and putting together a very good package as to why we are asking for a reduced price from the listing price. But it doesn't end at the purchase price. It also goes into negotiating for particular items you may want to include in the house. So maybe you saw a gazebo outside that you absolutely love, and being able to make sure that we can negotiate those things into the contract. So we can ask for, you know, many different things. If it's a gazebo, if it's a hot tub. And I always say the worst thing the seller can say is no. So it's best we always try and we ask for you. Review paperwork and deadlines. The paperwork can be daunting sometimes, but if you have a realtor that is, you know, that knows what they're doing and knows their stuff, it is so important you go through everything with your realtor and know what you're signing. I think it was said here today that there's going to be a few very important dates that your realtors go over with you. One being subject removal date. The other one being the deposit amount date. And deposit, once again, I can go into this a little bit further, but deposit will form part of your purchase price. So when you put a deposit on your home after you remove subjects, that's not an additional cost. That is something that forms part of your purchase price. And then, of course, reviewing paperwork as to when you are going to be having completion and things like that. Lastly, and one of the most important things that I feel is solve any problems that may arise. So just last week, I had a client call me. It was completion day, and she called me first thing in the morning at 7 o'clock in the morning and said to me, Kaila, I don't know what to do. We need to be out of our house, moving into our other house. We have everything packed and ready to go. And our moving van, our movers just called us and canceled. We have people moving into our house and we don't know what to do. Well, thankfully she called me, and these are the kind of things we get to deal with, and it's exciting and it's so fun to be able to fix these problems. So for example, my company, Royal LePage Kelowna, we do offer a moving van services. So, you know, I was able to rent out our moving van and put on my moving cap and go down to that lady's house and be able to help her and her family move and get them out of the house in time and get them into their new house in time. And those things are really the magical parts of my job, because I'm able to build those personal relationships and talk about these situations in years to come, laughing about, oh, remember that time you almost didn't get out of your house? And I got to drive the moving van for you. So that's really, really special. Okay, thank you. Next slide, please. Is it a good time to buy? buyer's market versus seller's market. So a buyer's market, technically speaking, is when we have 7 to 10 months of inventory. The seller's market is between 0 and 5 months of inventory. We are currently technically in a buyer's market right now, sitting at just at 10.10 months of inventory. I'll get into that a little bit more with the next slide. But the great thing about a buyer's market is you're able to take your time deciding on home. There's more inventory. Get your realtor working for you and get them to show you properties on the market. Don't feel bad about needing to see 5 to 10 different properties. That's okay. And that's what's great about a buyer's market. Offers can be negotiable. You are able to come in with a lower offer dependent on what the property is, how hot the property is, and have that conversation with your realtor. And then have more terms favorable for the buyer. So instead of working on closing dates that work for the seller, maybe your realtor can negotiate terms that work in favor for you. Next slide, please. So Central Okanagan stats. So right now in the Central Okanagan, we have a total inventory of 10.10 months of inventory, which means we are technically in a buyer's market. With that being said, townhouses, as you see, are 6.17 months of inventory. So townhouses are going quite quickly, and we are seeing those products go back into a seller's market. Condos, we are still sitting quite lush at a nice buyer's market. The one thing with residential single-family homes, we are seeing the amount of inventory trend down, which means we are seeing it slide from a rich buyer's market to more of a softer buyer's market. And I definitely foresee that we will be getting into quite I would say a fair market where it's not just a buyer's market or a seller's market, but it is dependent on the property and how well it's priced. So as you can see in December, we had 197 sales. With March now, we had 334 sales. So things are definitely starting to pick up. And believe it or not, I was in multiple offers last week. So dependent on the property, it is so important to make sure you are pre-approved, because on one of those multiple offers, I was able to bring my pre-approval letter with me, and we were able to win in multiple offers because of that pre-approval from the lender. So very important to make sure you get pre-approved beforehand, especially in this market. All right, rent versus own. Is it a good time to buy? I mean, I think it's always a good time to buy, but the one thing I will definitely say is a statistic I found pretty interesting is net worth of homeowners of all ages is on average $685,000 or just over that. And the net worth of renters of all ages is $24,000. So home is really, really where your wealth is. And if you can get into the market, even if it's not your perfect property right off the bat for your first home, do everything you can to get into the market. And then you can utilize that home as a stepping stone to move up, or be able to use that as a rental going forward, and really be able to find the proper home for you in a few years. But get into the market when you can. Next slide, please. Thank you. Oh, yay, the fun part of finding your home. I love this, wants versus needs. So we kind of talked about that a little bit earlier, but I love sheets and I love spreadsheets. And I think it is something that is really beneficial, even if you're not ready to buy right away, but really start writing down a list of what are your actual needs versus what are your wants, and really communicate that to your realtor. The more you communicate with your realtor, the more we're going to be able to find you the absolute best home for you. And when we see that property come on the market that has 3 bedrooms and 3 bathrooms and a fenced yard for your dog, and it's close to the school that your kid's going to be going to, we can call you and say, hey, we found this property for you. Let's go check it out. So just some examples of wants versus needs. Open concept, that's probably a want. Need is probably 3 bedrooms and 2 bathrooms, or a certain school district, or maybe you need a basement suite because that is something that's going to help you with your mortgage payments. So really diversify what is a want versus a need. Oh, and I have a pro tip. I just was reading that. Professional photography can do wonders, which is so true. So professional photographers can remove things from photos. They can make things look bigger or smaller. It can be deceiving. Very important though. So you make sure that you go to see the properties in person if you can, because things can look so much different, you know, from the photos. And making an offer. We found your house. Everything is awesome. We are able to say that this is going to be the property that you want. It works for your family. Everything checks all the boxes. Now we put together the contract of purchase and sale. Not going to touch a whole lot on this, but what I can say is just make sure that you give 2 weeks for subjects. Tell your realtor we need 2 weeks for subjects, because that at least 2 weeks for subjects, because you need that for financing. And it's not good for you, and it's not good for anyone to be fast tracking the subject process, because you need it for financing, but also for a home inspection. Home inspections are picking up here in the Okanagan, and it's really important that we give all the professionals time to do their due diligence to make sure that you really are satisfied with purchasing this property. And once we get the offer accepted, next slide. And we remove subjects, and your home inspection comes in great, and financing is good, and we're all excited, and we're moving and painting walls and figuring out what's going to go where. We want to make sure we have our countdown to closing in place. So I would say number one is making sure your realtor or yourself sets you up with a good home insurance company, so you can get home and fire insurance beforehand. Don't leave that to the end, especially in the Okanagan, where we do have hot summers. And I would say, if you can, get your home insurance bind it within 30 days of closing. Make sure you have everything set up with your lawyer, so you can go and get all your closing documents signed. And most importantly, get ready for your keys and your amazing, beautiful closing gift from your realtor. Make sure you get a great closing gift. And that's all for me. And I really appreciate everyone's time.
Thanks, Kaila. I'm just going to come back onto the screen here if I can, and then we can have a little chatty chat.
Yeah.
Yeah, so I think that went awesome. Thanks so much for all the information. I'm excited to see what your realtor gifts are.
Oh,
da, da, da.
You know, if you buy something with a great kitchen, what has been going great is a private chef event at your home for you and 6 of your closest family members. That's a fun one.
And are you the private chef, Kaila? Kaila, what is your accolades? What is it? You were one of Canada's top chefs. Is that what it was?
Oh God. I briefly dabbled in television TV. I am not a chef at all. I am a Z-list personality from MasterChef Canada.
Amazing.
But real estate is where my dreams are.
Amazing.
That's awesome. Melissa, I'm chiming in because I have a question coming in, and I think it could probably be addressed to Kaila. It could go to a lender also. But what are you seeing for first-time home buyers out there? What's the typical age you're seeing? Has it been getting higher over the last few years?
Yeah, absolutely. You know, I think it is really when we're seeing the younger people purchasing for their first time, we are seeing gifts as down payments from, you know, relatives or family members or something like that. And if you don't have that luxury of being able to get a gifted down payment, we are seeing the age go up a bit on first-time home buyers, which is okay. And that's, it's never too late to get into home ownership.
Yeah, I think Melissa, you'd agree with me. In the last few years, we do know that in the last couple of years and going forward, I think it's the biggest transfer of wealth that's ever happened. And we're seeing that in these large gifted down payments. But I would encourage all young first-time home buyers, don't get discouraged. There's a way to save. This is why it's important to create those relationships with your lender. They can give you some great advice, and they can point you in the direction of an account manager to help you budget and get you to the stage, right?
Yeah, exactly.
Thanks so much, Kaila. I'm going to take myself off screen.
Yeah, I'm going to take Kaila off the screen. Thank you, Kaila.
Thank you, everyone.
Okay, so now we are going to move to the Middleton. So we've got the Middleton team joining us. I'm just going to bring up their slides here. Anytime now, and I press the magic button. There we go.
Can you hear us?
Yes, we can hear you.
Okay. All right. Good, good.
Welcome.
Hello.
I'm actually going
Hi,
to
everyone.
zip off.
Hi.
So
but
I'm
thank you
Erin.
for joining
I'm
us.
Steve. Yeah.
Yeah, we're the Middleton team. We're located down in the Lower Mainland. Primarily, we service the Fraser Valley, but that is a very large region. It stretches anywhere from like Tawasin all the way to Hope. So we cover a lot of ground, and collectively we have been realtors for over 30 years.
Yeah.
And in the industry for myself, I started off in appraisals, and Steve was always a realtor and decided that I was a better fit for not punching out reports and getting to find people like all of you.
Yeah. So everybody was talking about when they bought their first house. I bought my first house back when I was 20 and long before I became a realtor. So longtime believer in the power of real estate investment. And as a matter of fact, me and my brother bought it together. We still lived at home with our mom at the time. So and then I didn't become a realtor till I was about 27. So yeah, next slide. Oh,
There we go.
there we go. So when is the best time to buy, and shouldn't we wait for lower interest rates? So back in this is a great stat here. Back in 1971, the interest rate was 7.33%. If you had waited for interest rates to drop, you would have waited 22 years for rates to come down. That's what happened at that time. And while you were waiting, house values quadrupled in that same time frame. So I've always been a big believer that you don't wait to buy real estate, you buy real estate and wait.
Mhm.
And just wanted to tell everybody kind of a little personal story in there. Everybody's talking about buying homes when we're younger and that kind of thing, and Erin and myself both went through divorces, and we're second marriage here. And so when that happened, we got together maybe 10 years ago, but we were locked out of the market. During divorces, we both lost our homes and whatnot, and we actually had to rent as realtors. We had to rent for 6 years. And during that 6 years,
That's a bit of a kick in the teeth.
yeah, it was a tough pill to swallow for us. But we've got a brood, a Brady bunch. We've got 6 kids between us, so we had to rent fairly good sized home. And at the time, it was a lot cheaper than it is now, but we were paying about $4,000 a month. So if you do the math for 6 years, we paid almost $300,000 in rent in a 6-year period. And during that period, the home that I had sold through my divorce went up approximately $700,000 in value. So I always kind of have to gulp and swallow hard and tell people that it cost me $1 million during that 6-year period where we were locked out of the market. So we aren't kind of out of touch, being that we owned real estate young, but we had to start over again in the last 10 years.
And it did only take us in the 6 years that we've been together, we've acquired 2 rental properties, as well as a new family home for
Yeah.
ourselves.
So you can
possible.
build wealth in real estate relatively quickly.
Yeah.
So here's some simple facts. A homeowner's net worth is more than 28 times greater than that of a renter. That kind of reflects on something that Kaila had said.
Mhm.
And as we all know, conditions over the past few years maybe haven't been the most friendly for first-time buyers.
It's been a bit scary, and I think the media kind of enhances that fear.
Yeah. Next slide. Yeah, so the good news is that this year, we know that interest rates are coming down. It's speculation. Nobody knows exactly how much, but it's not unrealistic to think that there's going to be 2 to 3 interest rate cuts the second half of 2024 here. There's a lot of talk about a year from now, we'll likely be seeing rates maybe as low as a full percentage point lower than they are today.
Mhm. And to tie into, we actually had the statistic. So the average age for that person that asked is actually currently 36 years old.
Yeah, so don't feel like you're missing the boat if you're in your late 20s or early 30s and you haven't bought yet. That's a Canadian-wide average. So And in our market down here, we've actually had luck finding options for buyers that are on par or close with rental prices, depending on the situation. So we've got a little story on the next slide here. We had a first-time buyer recently that was exploring options. He was living in a condo, and he actually ended up buying the condo from the owner that he was living in. So he didn't even end up having to move at the end of it. But the payments ended up being very close to what he paid for rent. As you guys are probably all aware, if you're renting currently, rents have been on the rise for the last number of years, and it doesn't seem to be stopping. And at the same time, we're going to be experiencing interest rates coming down and cost of ownership dropping. So in this scenario, this house checked most of the boxes, or this condo checked most of the boxes for this phase in this client's life, but he knew it wasn't ideal in the long term. So he had kind of said, well, this will work for me for now. It'll be a 3 to 5 year plan. And then, we'll see what happens at that point. Potentially I'll sell and move up to something else, or if I can, maybe I'll keep it and buy something else.
Yeah, so he just basically saw this as a forced savings, as the slide shows. It's kind of like a forced piggy bank, and it's obviously just going to grow from his contributions, and it's going to appreciate over time, and it's safe.
Yeah. Next slide. So looking at homes online and having your realtor show you homes and attending open houses and whatnot is all a big part of the fun of buying your first home, or buying any home for that matter. But the most important step to home ownership is always getting pre-approved.
Which Kaila, and I'm sure it's all been touched on.
Yeah. So having a pre-approval letter from Vancity ahead of touring homes, this is what it means for you as you shop around. You have immediate financial clarity, so you'll know the amount that you can browse and tour and make an offer without any hesitation.
Mm-hmm. And it gives you an upper hand, again, as it's been touched on before, but it makes you stand out from other buyers who weren't already pre-approved. It gives the seller confidence that you're a serious buyer, and it will totally make a huge difference when the inventory is tight in a market, when it's not a lot out there.
And it helps relieve your stress because it gives you peace of mind. It saves time. It lowers your stress. Because when you find that home that you love, you want to be able to act as quickly as possible. You want to be paperwork ready, so that you're not scrambling last minute trying to put things together.
Yeah, there's no hidden surprises. You know what you're in for.
Yeah. So that's that. So if you guys have any questions about the buying process, we've got our digital business cards there. If you snap a shot of those QR cards, we're happy to set up a 15-minute consultation call with you and answer any questions you might have.
Thanks for joining, guys.
Awesome. Actually, if you want to stay on, Stephen or Erin, thank you so much. Great information. There's a question that I think you guys kind of touched on that I think probably you guys could answer. How long should we plan on owning our first property? ? For example, we're renting a 1-bedroom, but we need a 2+ bedroom soon. If we buy a 1-bedroom, how long should we expect to hold on to it before buying a bigger place? I guess there could be many answers to this, but what do you think?
There's no one answer for sure. I mean, I know that the Canadian-wide statistic is the average homeowner is 5 to 7 years per property. Not to say that you obviously can't sell and move up to something else quicker. There's always all kinds of factors. The market can change, but in the long term, the values always go up. Or over the last 100 years, the values have tended to double in the Fraser Valley. I'm not sure the Kelowna statistics exactly, but in the Fraser Valley, they tend to double every 10 to 12 years. We always believe get into the market with whatever it is that whatever you can get into the market, and then you roll from there and you adjust as time allows.
As long as obviously your finances can afford for you to maybe move up, and you're not going to have any penalties with your mortgage and all that stuff. Those are all things to consider, but there is really no right time. If you can and it's the right time for you, it's always the right time to move and buy.
Yeah, we always believe that you buy as quickly as you can to get into the market. even if the market doesn't increase significantly in a couple of years, the risk is that it does. And when the market does take off, you can never save quick enough to make up for that lost equity time. Like we said, the 6 years that we were out of the market, the property that I had sold at the beginning of that went up $700,000. There's no way I could save $700,000 in 6 years. So
and trying to live.
yeah.
Yeah, right. Well, Steve and Erin, thank you so much for hopping on. I know I've worked with your team and you guys personally for the last 15 years, and there's never been, you're always a wealth of information, Steve and Erin. So I so appreciate you guys coming on today. Thank you so
Awesome.
much.
Thanks for having us.
Thanks to you
Yeah,
both.
great.
All
I'll
right.
pass it on to you, Melissa.
Okay, sounds good. Okay, so next we have, I'm just going to move to the next slide here. We have our lovely lawyer. So the lawyer, when do you need them and why is it important? So I'm just going to bring up Deanna's slides and I'm going to pass it over to you, Deanna. There you go.
Perfect. Hi, thank you. Thanks so much for all the great information so far. I'm happy to be here and to talk about the legal perspective of buying a home. We were Montgomery Miles & Stone is a firm in Kelowna, and we have about 8 lawyers here. I have been practicing in real estate for 15 years, so I really enjoy helping first-time home buyers because I feel like there's a lot of questions, there's a lot of interesting things that I can help to guide you along the way. So now that you've kind of gone through, you've worked with your realtor, you've found the home that is perfect for you, you've put in an offer, you've talked to your mortgage broker, you've got your financing arranged, what happens next? So that's kind of what we're here to talk about today. So basically, we're going to look at kind of what do real estate lawyers do. So you might hear the term conveyancing lawyer, real estate lawyer, conveyancer. Basically, they're the same thing. So a conveyance is really the conveying or transferring the property from the seller to the purchaser. So anytime you hear conveyance, that's what it is. It's essentially conveying real estate from a seller to a buyer. So again, we'll look at what happens before condition removal, what happens with the lawyer after condition removal, and what you'll be wanting to do yourselves. And of course, what everybody wants to know, what are the costs? What kind of things are we looking at? So in terms of what real estate lawyers do, so again, once you've put in your offer with your realtor, so you've worked on negotiating the contract, you've got your pre-approval, what'll happen is you'll see one of the conditions in the contract is typically subject to legal review. There's also probably going to be a subject to title review condition in there. So what we're looking for when we're doing your review for you is, with regards to the title review, we look at the title to see if there's any weird charges in there or any charges in there that would be concerning to you and what you want to do with the property. So some examples are an easement, for example. If you have a private laneway behind your property to access your garage and it's a laneway for 6 different properties on your block, then there could be an easement registered over your property that's going to allow you and your neighbors to use that laneway that runs over your property. So that's going to stay on title after you complete your purchase. That's probably not an issue for you because you're going to want to access your property through the laneway. Other restrictive covenants that we may see, other charges include restrictive covenants, are things like a no build covenant. So for example, on your title, you might see something if you have a large hill in your backyard, either sloping up or sloping down, there may be a covenant registered on the title that says you cannot build on this hill. It would be in favor of the municipality. They put those on there because they want to ensure that you're not building on a hill that could be unstable or is too steep, so that there aren't any problems with the property in the future. So those are kind of things that we would look at in our title review, just to ensure there's no issues with the title in case you wanted to, say, build that pool in the backyard. We want to make sure there's no restrictions on your ability to do that. The other thing that we look at in our review would be a contract review. So we're going to, again, you've negotiated this contract with your realtor. We're just going to look through it with you, second pair of eyes, and just go through the conditions, make sure you don't have any questions, or if you do, we would go through them. make sure that you have an understanding of where you're at with all of your conditions before you waive or remove them. And we would also review other documents that may be necessary for your particular type of purchase. For example, if you're buying leasehold property, we would go ahead and we'd review the lease for you to make sure there's no issues there. If you have some strata documents because you're buying a condo, and you have questions about certain strata bylaws or certain minutes of the strata, we could review those with you, go over any questions you have. So it's kind of just a due diligence where if you have questions, you're not sure about something to do with the property, we can help go through those with you before you remove your conditions so that we can make sure the property is right for you. The next thing that we would talk about, and sometimes this is before or after subject removal, condition removal, is the structure of the title. So when one person is buying, it's easy. You are the sole person going on title. You're going to be the sole owner of the property. So that's an easy answer. We're gonna put you on there. And when you have multiple buyers, we will be putting multiple people on title, and the structure is really dependent on what your objectives are, what your relationships are. So for example, if it's a couple, a spouse, two spouses buying a property, they may want to be what's called joint tenants. So joint tenants is when two people go or more go on property and they have the right of survivorship. So if one of those spouses in this example passes away, that property is going to transfer automatically to the surviving spouse. Doesn't have to be a spouse, could be siblings, could be parents, but that's how joint tenancy works. Whereas if we're going to look at tenants in common, which is the alternate way of looking at it, then you would have no right of survivorship. I think we have a phone call. Is that mine? Sorry, just hearing a phone call. So basically the tenants in common structure would be that if, say, you and a sibling were buying a condo up at Big White, and if something were to happen to you, you want your interest to go to your children, and same with your sibling. What we would do is we would do tenants in common, where if you pass away, your interest goes into your estate. If your sibling passes away, their interest goes to their estate and it gets distributed through their estate. So those are some of the things that we look at when you have multiple buyers. There may also be some corporate corporate ownership. So if you were buying an investment property and your accountant might say, hey, it's a good idea to own this property through a corporation. So those would be all things that we would look at, talk to you about your circumstances, what your goals are, and come up with a plan for that. Identifying potential red flags. Again, we're reviewing all these documents to see if there's any issues, red flags with the property, or any issues with with things like we would look at, are there tenants? Do we have any issues with getting those tenants out if you're planning on using the property? Are there any weird liens, charges on title that we are concerned with? So those are the kinds of things that we would look at and get done before you remove your conditions to ensure that this is the right property for you and you're ready to move forward. So next, what happens after condition removal? So what we do is I'm going to talk about some things that you do. So you've removed your conditions, you're ready to move forward. You're satisfied with your home inspection, your financing, you've got your insurance, everything's ready to go, and you want to move forward with the purchase. So between the condition removal date and the completion and possession date, there's a few things that still need to be done. So from the client to-do list, again, this is just a basic list. There's definitely more things that you may need to do, but you're going to want to make sure, again, that you have your home insurance in place. So you're going to be getting home insurance. It's great to get this as early as you can. You can usually get it up to 30 days ahead of the completion date just to make sure you have it. In Kelowna, for example, we often have some wildfires in the summer, so sometimes getting insurance can be tricky if there's fires near you. So we always advise to get it bound or binded as soon as you can by paying for the policy once you've removed your conditions. Set up utilities, so you can set up utility accounts for things like gas, electricity, set up your internet provider cable to get them ready to install everything once the purchase is completed. sign up appointment. So again, we are gonna be setting up a sign up appointment with you so that we can be signing all of the documents prior to completion. So usually what we do is we would have an appointment, say a week or so, or a few days before the completion to sign all the final documents. Again, that can be earlier if needed. We can accommodate different timeframes. And then ensuring the funds for your down payment and the rest of your closing costs are available to transfer to your lawyer. So if you have part of your down payment is coming from GIC, RSP, some kind of investment that's locked in, or even if it's not locked in, sometimes it does take time to get money out of your investments, out of your bank, get it transferred properly. There can be some holds, delays. Usually it takes a few days to kind of get things out of your investment. So that's something just to keep in mind, is talking to your financial advisor, your banker early on, so that we can ensure that at least at the very latest, the day before completion, you're going to be able to transfer all the money that we need to close into the lawyers or into, our trust account, so that we can ensure that we have everything ready to go to pay the seller on the completion date. Arrange for movers. If you're getting movers, again, you would be doing that. And then, of course, get packing. You're going to have a lot of packing to do, so that's something that you would be working on. Meanwhile, while you're taking care of that, we're going to be doing all the legwork, all the backroom work that not everybody always sees. But basically, we're going to get started on the documents. So we're going to be preparing land title documents. So there's the transfer documents that have to be filed, property transfer tax return, there's transparency declarations, all of the documents that need to be filed with the land title office to complete your purchase. We're going to be preparing your mortgage security. So once you've got the approvals with your lender, with your mortgage broker, we're going to be getting instructions from them to prepare the security that has to be registered on your title when you complete your purchase. So that's another part of what we do. Obtain an insurance binder. So again, you're getting your home insurance, but if you have a lender, we need to make sure that they are added onto that insurance policy as a loss payee. We would also be obtaining title insurance for you. Again, I can't go into explaining the whole thing because that could be a whole presentation in itself. But basically, title insurance protects you against challenges to ownership of your home from problems related to the title. So for example, if there was an error in the survey of your property and your home is actually encroaching over your neighbor's yard, that would, as long as it was existing prior to you purchasing the property, then that's going to be something that would be protected against, among many other things. So that's usually a lender requirement that we have title insurance for the property. So we send over the land title documents once they're prepared to the seller or the seller's lawyer, and they'll sign up the seller with everything to get the transfer completed. We have an appointment with you guys to sign everything up and review all of the documents, go through everything, explain any documents that you may have questions on. And then the final process is going to be registering the land title documents and the mortgage security in the land title office on the completion date. So again, that happens on the completion date, and the money transfers on the completion date to the seller's lawyer, and you're going to get your keys on the possession date, which is either same day, next couple of days. So that's when you're going to get your keys with your realtor. Once we're done, again, we send over the net sale proceeds to the seller's lawyer, and we're going to report to you and let you know that everything's been completed and registered. And then you would touch base with your realtor to get the keys, and that's the exciting day when everything happens for you. So then the big question that always comes up, what are closing costs? So the closing costs would be reviewed with you when we go over the buyer statement of adjustments at our signing appointment. So the buyer statement of adjustments includes everything that you need to pay for as part of your purchase that will be transferred over to the various parties. So whether that's the seller or the utility company or the city for property taxes, for example. So the typical closing costs when you're completing your purchase, so you're going to be paying your purchase price. So you've already paid a deposit, so that goes towards the purchase price. You have the remainder of your down payment, and then we're going to be getting money from your lender for your mortgage. So all of those amounts go towards paying your purchase price. Then in addition to that, some additional costs that are included would be property transfer taxes, which we'll talk about further down, GST if applicable. We do an adjustment for the property taxes. So you'll pay your portion, the seller pays their portion. Same thing with strata fees. If you're buying a condo or a stratified townhouse, you're going to be paying your portion of the monthly strata fees and the seller will pay for their portion of the strata fees. We can adjust for utilities. So if there's water, sewer, garbage pickup that's been prepaid by the seller for a month or a quarter or maybe the year, there's going to be an adjustment for that. Again, the title insurance and your home insurance, those are going to have to be paid for. Title insurance is usually $200 to, it could be $1,000, just depending on the type of property. I'd say for kind of your normal standard residential property, you're looking at around $200. Legal fees. So again, we'll have our fees included on the statement of adjustments. It's difficult to give a range because there's a lot of different components that go into what the legal fees will be, depending on the type of property you're purchasing, the type of financing you're getting, how the title's being structured, things like that. But, you know, for kind of a standard residential real estate purchase, a good estimate to budget for maybe $2,500 to $3,500. That's going to include fees, taxes, disbursements. Again, maybe higher depending on the type of property you're buying and the type of financing that is going into your purchase. And then again, adjustments for tenants. So if there are tenants in the property and they're staying in the property, you're going to, if they've already paid rent for the month and you're buying it halfway through the month, you're going to get an adjustment for that, a credit for that. So the other things I wanted to get into a little bit more. So again, the closing costs, so the GST. So a general rule is you're going to be paying GST on the purchase price if it's a newly built home. So unless you qualify for, there are certain exemptions for it, but basically GST is typically payable on new property. It's 5% of the purchase price with some exceptions. But the other thing I did want to note about GST, because it is a common misconception, is that GST can be payable on used residential property, depending on how the seller used the property. So the typical example we see around here is properties up at Big White. So if a property up at Big White was bought new and it was thrown right into the rental pool and it was used for commercial purpose to rent out the property and it was never used by the purchaser, and they've then passed that down to the next purchaser who's done the same thing. If you then want to convert that property into a personal use property, GST may be payable. So that's just something to keep in mind, is that it's not an automatic that there's no GST on used property. As a general rule, yes, but there's always exceptions. So again, you would work with your realtor and perhaps an accountant and your lawyer to figure those items out. Last but not least, we have, in terms of closing costs, one of the big ones is the property transfer tax. So property transfer tax is typically payable on every purchase of property in British Columbia, unless you as the buyer qualify for an exemption or a partial exemption. So the first-time homebuyers exemption is what you would probably be applying for. And the good news for you is that the cap rate on when you can qualify for the exemption just went up as of April 1st. So you'll see on here on my slide, to qualify, it's a little small, you must be a Canadian citizen or permanent resident, have lived in BC for at least 2 years prior to, at least a year immediately before the date you register the property, or have filed at least 2 income tax returns as a BC resident in the last 6 taxation years immediately before the registration date. Have never owned a property or a registered interest in a property that was your principal residence anywhere in the world at any time. Have never received a first-time homebuyer's exemption, and the property must be only used for residential or purposes. So it must be your principal residence and obviously a residential property, not commercial. Have a fair market value of $835,000 or less. Again, that just got increased as of April 1st, 2024. Be smaller than 1.24 hectares, or there might only be a partial exemption, and again, contain only residential improvements. So if all of those requirements are met, then the buyer will be exempt from property transfer tax on the first $500,000 of the purchase price of the property, and then there's a sliding scale above that. So On the next slide, I put in some examples. So again, if you qualify for the first-time homebuyers exemption and you purchase a home for $500,000, you're paying $0 in property transfer tax. $600,000, you're paying $1,000. $750,000, you're paying $5,000. Up to $860,000, you're paying $15,200. And then on the right-hand side of that column, you'll see if you don't qualify for the exemption, at the lower values, you're paying a higher amount, right? So the $500,000, you would be paying the regular amount, which is $8,000, up to when you get up to $860,000 or higher, you no longer qualify for the exemption. So you would just be paying the normal amount, which would be $15,200. So the way that it works is when you're calculating property transfer tax, it's calculated as the first 1% on the first $200,000 of the fair market value, 2% above that up to $2 million, and then 3% on the value greater than $2 million of the property. So that's just something to keep in mind, that you may qualify for that exemption, but again, you can talk to your lawyer, realtor, and accountant about that, just to ensure that that's something that you will actually get, because it can save you a bundle. Now, if there are multiple people going on the property, everyone has to, well, not everyone has to qualify, but you're only going to get the exemption on the portion of your interest. So for example, if you are a first-time home buyer, but your spouse is not, and you're each buying 50% of the property, you're going to get that exemption on your 50%, and your spouse is not going to get it on their 50%. So that's where, again, like I talked about before, we can look at structuring title options. So whether we do a tenancy in common, you get 99% in your name, they get 1%, then we can go ahead and we can do that as well. So I think I'm out of time. Again, my one takeaway is really just call your lawyer early on in the process. We can identify red flags. We can kind of get information from you to make sure that everything is done appropriately and structured properly for what your goals are.
Thank you, Deanna.
Thank
That was
you.
so good. One of the things that I really liked is you talked about that GST, that nasty GST that can follow you around from property to property. I've had that happen before, where people have been like, well, and now I'm going to have to pay GST. And I'm like, oh yeah, you are, because it was owned by a commercial previously. So that's something that a lot of people don't realize. So very, very important. So thank you for that. And thank you for going through the new property transfer tax rules. That's fantastic. I think everybody was sort of like, what are they? And then now we know. So that's really great. Yeah, lots of really, really good information. I appreciate your time greatly. So
perfect. Well, thank you so much.
Yeah, thank you. Okay, so I'm going to take you off, and then I will move on to our next presenter and get the slides ready. Okay, so now we have our wonderful home inspector. So Kendall, you can unmute yourself.
Yeah, hello everybody. How you doing today? Can you hear me?
Okay, yeah, we can hear you. I'm going to bring your slides forward and let you take off.
Fantastic. So yeah, thanks so much for having me here today, Melissa. This has been great. I always love doing these first-time homebuyer seminars. I always learn so much about what everyone else does as well. There's a lot of moving parts to every real estate deal, and so it's good to understand everything going into it. Thanks to all the other presenters as well. Let's hop into it, and thanks so much for sticking around. So my name is Kendall Kinnear. I'm a licensed home inspector in Vernon, BC. I sit on the Home Inspectors Association of BC Board of Directors, and I own and operate Argos Home Inspection. So we service from Kelowna to Sicamous to Salmon Arm and everywhere in between. We go quite a few different communities. We like what we do. My background is in water damage restoration. During that time, I spent many years working on mold and asbestos, fire and flood damage. We've seen a lot of different things in our time between that and being a home inspector. So what are some of the benefits of working with a professional home inspector? Well, first off, minimizes some of the risks of purchasing a home. You know, it doesn't minimize all the risks, but it can help you understand what you're truly buying, can give you a chance to decide if you want to take on expensive repairs or replacement of older systems, if that's what's in the home. Can show you the true condition of the property. It's really tough to get a full sense of the property when you do a short viewing or a couple short viewings. So this really gives you the full scope of what you're purchasing. Highlighting any safety issues in and around the house. Safety is really important to us as home inspectors and to our clients as well. There are families in there. We want to make sure it's very safe for you guys. A home inspection can provide your realtor with buying power to negotiate the cost of the home if there's expensive deficiencies. Now, you're always going to have to talk to your realtor about this one. I don't really weigh in too much about this, and it really depends what's in your contract. And I want to say that not all items are for renegotiation. It is common to have a long list of minor deficiencies on an older home, but I don't want you to get overwhelmed. Most minor issues are easily remedied. So that's important to keep in mind, just to adjust expectations. When you're buying a used home, we do find things. And the home inspector is a neutral third party with no ties to the sale of the home. I don't have a horse in the race, and I just want to get you all the information that I possibly can. Get off to the next slide there. So why we love what we do. I love being a home inspector. It's easily one of my favorite careers that I've ever done. I've had a few different ones between trades and this kind of stuff, but I love being a home inspector because I get to help you, our clients, understand your new home and the systems within it. So beyond talking about deficiencies in a home, I like to be able to show people, where do I turn off the water and how can I turn off the electricity, and what are some types of maintenance items that I can take care of to take care of my home. So that's part of my service as well. Sharing our knowledge and experience with our clients and realtors when you guys need it the most. That's a really big part of what I do. So we have a lot of experience in homes, and we know a lot about homes, and we want to share that with you, and that's part of our service as well. Keeping our clients safe in your homes, highlighting any safety issues found in and around the property is a really big one for me. As a father and a husband as well, we want to make sure that our families are safe in the homes that we're purchasing, and bring it up at the inspection. You can get it taken care of, and then there's not a worry about that. And protecting, your biggest investment that most people are going to make in our homes. So that's a big part of why we love what we do. So how to find a home inspector. This has been talked about already, but one way is to ask your realtor for a trusted referral. Most realtors are going to have a few referrals for you, and they've built their team around some trusted individuals. You can research the inspector's website and Google reviews. It's always a really handy way to see what other people have to say about them. Asking for a sample report is another great option, because then you can see how that home inspector is going to communicate and what you can expect from your own home inspection report. And I would just recommend that you verify that the inspector is licensed through Consumer Protection BC and a member of the Home Inspectors Association of BC. This is a members-driven professional organization in the province that helps with training and helps home inspectors get licensed in BC. They have a great search function on their website. So wherever you are in the province, you can find an inspector on their website. And if you're in the Okanagan, Kelowna, Shuswap area, give us a call. We'd love to help you out. So here's some average costing for a home inspection in my working area. Now, we just did a fee survey through the province, and this lines up pretty well with most home inspection fees outside of the island, and they're a little higher in northern BC as well, just because there's less inspectors up there. So a detached home inspection up to 2,500 square feet starts at about $550 plus GST. Condo inspections. Now, this is typically the suite only. Because you're buying into a strata building, there's other considerations to take, and that's a whole other thing. We could talk about strata properties for a whole presentation, so I won't get too much into that. That is 400 GST. Townhouses, again, 500 plus GST. Mobile and manufactured homes, 550 plus GST. Now, when it comes to mobile manufactured homes, one tip I really have for you all is to make sure that whoever you're hiring is going to be going down into that crawl space underneath your manufactured home. That's a really important aspect, and not every single inspector gets down and crawls the entire crawl space. Very important. All right, so some other types of inspections outside of just your basic home inspection. We've got a couple different ones here. So we have what's called a sewer scope inspection. Now, these are typically recommended on older homes where we have older piping going to the street. So this would be for cast iron drains especially. This is a part of a home that we cannot see and we don't comment on during a home inspection. So what a sewer scope is a specialty camera that's placed down the sewer drain, and we can assess the condition of the pipe to the street. This is really important if the pipe is damaged or old or there's root intrusion. It's good to know what you're getting into because sewer replacement can be an expensive deficiency. Depending on where you're buying in BC, the next one here is a well or septic inspection. Depending on the type of property you're purchasing, you may have a well or a septic system. It's good to know if these systems are in good shape. Again, if they're not, they can be expensive to replace. And then we get on to the wet inspection. This stands for Wood Energy Transfer Technology. And what this is related to is wood burning stoves and fireplaces. And so your insurance company is going to want you to have a wet inspection to make sure that it's a safe appliance to burn wood in, and that it's been well maintained, and that there's no safety issues that need to be addressed before using that and before you get insured to use that type of heating system in the home. Can head on to the next one. So just a couple home inspection myths. These are some of the common ones that I hear all the time. So home inspectors can offer advice on buying the home, or home inspectors should offer advice. So I get asked this question all the time: should I buy the home? And so I believe a home inspector should not ethically give anyone advice on if they should buy the home or not. You know, our goal is for you to understand the condition of the property, and you can make an informed, educated purchase. Working with your realtor, they can help you probably a little more with this question than I can or should. Homes pass or fail an inspection. This is one that I hear all the time, and I get it. Because sometimes people don't buy the home after the inspection, and maybe you could say it failed an inspection. If we can head on to the next slide here. So we don't give pass or fail comments to clients. It's not something that we do. I want to describe the components and materials of the home, comment and make recommendations on any of the conditions I find around the home, and put them into a full report so that you understand exactly what you're purchasing. It's not really my place to say, hey, this passes or fails. I don't really know what type of budget people are working with or what their expectations are for their home, and everyone is different. So that is why I choose not to use that kind of language. Home inspection covers everything in and outside of the home. So though a home inspection covers many parts of the home, it may not cover everything, and you should carefully read the scope of inspection that your home inspector will provide you prior to using their services. So when you're hiring that home inspector, you should be asking them to provide you with a scope of inspection. This will go through the scope of services that they are offering you. And this is really important to understand what parts are included and what parts aren't included. Buyers don't need to be at the home inspection. So I really like it when buyers come to the home inspection. I think it's good to be part of it. Some people are going to come at the last hour of the home inspection to do a bit of a walkthrough. Some people just want to come right at the end of the home inspection for a walkthrough. But it's highly recommended. So this is where you get to ask any questions about the home and where I can show you in person any of the deficiencies we noted at the property. And it gives us a chance to give you important context to what you're going to see in your home inspection report. Okay, that is everything I brought today, folks. Again, my name is Kendall Kinnear, and I want to operate Argos Home Inspection. Follow us on Instagram at Argos Home Inspect. We have lots of helpful home inspection related content there for you as well. Thanks so much.
Thanks, Kendall. So yeah, I can attest, I'll just sort of go backwards. I can attest to your Instagram following. As I was saying earlier, you have amazing information, even just for general home maintenance. One of the things that I loved, one of the many things that I loved in your presentation was you kept emphasizing the safety of the home. So I think that that can't be, you know, underscored enough when you're buying a home, getting that home inspector to look at the safety aspects of the home. Super, super, super important. And then the fact, you know, how you talked about the home inspection being sort of overwhelming, a very long report. But like you said, some of the things are truly minor, right? They're just like, I mean, I can remember when I bought my first house and there was something in the attic. There was like some kind of downspout or I don't even know, something up there that wasn't closed properly. And somebody just had to go in and just, you know, stick it back on. But obviously that was in the report. So I do have a question for you. How long does a typical inspection take?
Yeah, so typical detached home inspection, 2,500 square feet. We're looking at, you know, about 3 hours, give or take, sometimes less, sometimes more, depending on the condition of the property. And Melissa, I just also wanted to touch base on what you just said there. So, you know, we do report on a lot of different things. Ask your home inspector if you see a long list of deficiencies in the report, you know, just try and get some context on that. I usually let people know, hey, you're going to see a lot of honey-do list type stuff in here, not stuff you need to fix all right at one time. And definitely if it's something that's really important, it's going to be on the front page of the report on the summary. So that's really important just to understand how those deficiencies work.
Cool, that's cool. And then one other thing is you are doing some certification to look at pools, right, as part of your home inspection?
Yeah, currently. So I've just gone through some training programs. I'm currently looking for mock inspections just to kind of get my feet wet, as they say, to start adding this service to our business. Yeah, and so we're going to be this spring offering pool and spa inspections, and that's really exciting. Oh, a new offering. Really looking forward to that. And that's so more just like a visual inspection of the heating systems, the pool decks, and yeah, it's going to be good. I'm looking forward to it.
Very cool. Will you come inspect my pool if you'd like?
I'll be there. Let me know when you open it up.
Awesome. Okay, well, thanks so much, Kendall. And yeah, we appreciate all the really good information, and hopefully you get a few follows from this and some contacts. Thanks so much.
Yeah, you bet, Melissa. Thanks. Have a great afternoon.
Yeah, you too.
Okay.
Okay, so that is the conclusion to our wonderful presentation. I hope that everyone got some good information. Lindsay, did you want to come back on with me and say goodbye to everybody? So yeah, thanks to all of our presenters. I feel like, you know, we did go a little over, but I think that information was so amazing, and I feel like we could have gone on for even longer, but just some really good, you know, like I said, a really good, what was the term I used? A handbook? Was that what I said?
A virtual handbook. Yeah, I thought that was such a good, yeah, you are great on the Instagram. I am not so much, but I'm trying to get there. Speaking of which, I don't know why this correlates to the questions in the comment box, but we are over time. So I don't want to miss out on anybody's questions. You've got our contact information. We're happy to connect you with anybody that was on this presentation today. And please, if we didn't answer your question, I was trying to go through and give answers in the Q&A. If we didn't get to your question, please reach out. There is one on here that I did actually want to quickly touch base on, and I think maybe this will, Kaila, I think you could probably help with this. I'm not entirely sure the context of the question, and I want to tread very carefully. I'm 55 years old. I have no debt and enough savings to buy what I want. What special considerations are there at my age? From a lending perspective, we don't discriminate on age. So you could be, that's wonderful. You're only 55 years old. You're very young. We would have, there's any special considerations? I don't think so, but I am thinking there might be some special considerations in the real estate world, because sometimes you can find a really great property, but you have to be 55 at least to live there.
Hi, it's Kaila.
Hi.
That's a really, really good question. There is some incredible gated communities in the Okanagan that I know of, especially that are 55 or 45 plus, 45 plus on some, 55 plus on most. For example, Sunrise Village is a 45 plus, but then we have, other ones on Cameron and Yates Road that are 55 plus, and they're stunning. And the most incredible thing about 55 plus gated communities, I find, is number one, it's very safe. Number two, you have like-minded people around you. And number three, we do have a large demographic of retirees in the Okanagan. So for resale purposes, they are a very good investment. And not to mention that, but a lot of the time, because there is a small buyer pool, they can be a little bit less expensive than your traditional residential home. So I think, there are some beautiful gated communities out there for 55 plus that I wish I could live in. So counting down the days and years.
One thing
Thanks.
I will say on that, sorry, just to interrupt you, Lindsay, is CMHC does not insure in properties that are age restricted. So they won't go into age restricted areas or subdivisions or whatever, just because it's discriminatory, I guess, is the reasoning behind it. But yeah, so they won't do that. So just something to note.
All right. Well, thank you. And once again, Melissa, thank you so much for putting this on and bringing us all together. I got to meet some great referral sources for myself today. So I so appreciate all of you, and thank you so much.
Yeah, I think it was fun. Thank you. Thanks to everyone. I hope you got some good information. And like Lindsay said, our contact information is there. So if you need us, you know how to reach us.
Awesome.
Okay.
Thanks everybody.
Bye.
Bye.